Well, when it comes to our tax returns, the aim is to get the maximum refund while playing within the ATO's rules.
Yeah, you're going to stick to those rules. So with June 30 just around the corner, what should you have in place now to ensure you get it right at the end of the financial year? And here to crunch the numbers for us is author, financial advisor and founder of Pivot Wealth, Ben Nash. Welcome back, Ben. OK, let's just start off with some of the biggest mistakes we all make at tax time. What are those?
Well, I think a lot of people end up missing out on deductions simply because they either don't know what they can claim and they also don't keep good records. And so the ATO's got a lot of helpful information on their website about the different things that you can claim based on different occupations. So knowing what you can, making sure that you're claiming it is a big one. Another area is around making sure that you're declaring all of your income sources, particularly for people that are working, multiple jobs or shift work or getting gains from investments as well. That's something that the ATO is watching really closely.
Yeah, it feels like there's a digital footprint for everything now, so it's very hard to sort of do that little cash.
But if it's under $50, you don't need a receipt, right?
I'm not sure that that's the rule.
Oh.
Yep. Hello to the ATO. What can our viewers do right now to boost that tax refund?
Well, I think every tax time is an opportunity to understand the rules a little bit better and figure out how you can use them to your advantage. So it's about knowing what you can claim, knowing what strategies you can put into place, things like super contributions, share investing that comes with tax credits, even things like negative gearing or debt recycling can all make a significant difference to how much tax that you're paying. But the rules are a little bit complex and they can be a bit confusing. So you want to take the time to really at least understand enough to know what's going to be right for you and how to get the best result.
What's your take on whether you lodge early or you wait right up to the last dying moments of when you need to lodge? What do you tell people to do?
Well, I think you want to have a bit of an estimate of what your position is, whether you're going to get a refund or a bill. If you're going to get a refund, it makes sense to try and do your tax return as early as possible so that you can get the money back and get it starting to work for you. Probably not quite as much of a rush if you're going to end up with a bill. So I think understanding is key. You don't want to lodge it too early in the new financial year, though, because there is a bit of a delay for employers to report in their payroll data, for things like Centrelink payments to come through, as well as interest statements from bank accounts and those sorts of things. And you do have an obligation to make sure that when you do submit your return that it's complete and that it's accurate. And if you do it too early because you're trying to get your refund, it could be inaccurate and then you could end up in trouble.
Okay, what are some of the things we shouldn't be doing this tax season? What are the must-avoids?
Well, you don't want to be over-claiming is one of them, and particularly for people around the big deductions like work-from-home expenses and motor vehicle expenses. They're two big claim areas, and because of that, it's something that the ATO look quite closely at. One thing that's an immediate flag for the ATO is a carbon copy of last year's tax return, the exact same sorts of claim numbers or work hours as well. Ultimately, you need to be able to back up all of your claims so you have records. Probably should be different year on year as well, and making sure that you're reporting, particularly if you are selling investments. The ATO, as you mentioned, are getting better with their data matching, but they're still not data matching everything, but they probably will eventually. And some people think that if you're investing in an investment account, if you're not taking money out of the account, that you may not need to report a gain or a loss, particularly cryptocurrency. We've seen a big run in crypto over the last little while. You do need to report every time you're buying and selling an investment, and whether there's a gain or a loss, you could be paying tax on that, so you need to report it.
It's a lot to think about. What about, just aside from tax, what should we be doing at the moment to set ourselves up in the long term?
Well, look, I think this time of year, a lot of people are thinking about their tax refund for this current financial year and how to maximise it. But now is actually the perfect time to be smarter with your tax strategies for the year ahead, because that's often where you can have a bigger impact. Because in June or after the financial year has finished, it may be too late to do anything meaningful to change your position. Whereas if you start early, even doing something like a small regular super contribution that's tax deductible, that can boost up your investments, cut your tax bill. But you want to start those early in the year so it doesn't have as much of an impact on your finances as well. So it's almost like the New Year resolutions, but just for money nerds like me, I suppose.
Yeah, I mean, no, I do it. I go out and buy 8 big screen TVs just before June 30, and that's my sort of way of. I just feel like it's investing for my future.
Yeah, and I'm sure it is, and I'm sure you do.
Everyone's goals are different.
Endorse
right?
that approach.
I love TV.
It's a crazy time, but I'm sure sure a very exciting time for you as well. So
Absolutely.
yeah, thanks for joining us.
Thanks, guys.
Christmas for tax accountants.
It is. All right. For more financial tips from Ben Nash, check out his latest book, Virgin Millionaire.